Um, the reason we're talking to Glenn is to talk about mortgages. So I've I like an open line of credit.
Mm-hmm.
So what's the difference between a line of credit and a mortgage in terms of buying a house?
A line of credit is a revolving product. You can go in and out on it, and a mortgage is a line of credit. Let's start back. A mortgage is a charge against property, and you have to pay it back through a schedule, and that schedule could be a floating rate or a fixed rate. Floating meaning it comes in two flavors. Floating rates, you'll see here adjustable rate mortgages and variable rate mortgages. Those are the two flavors of floating rate outside of a line of credit. And usually the variable rate mortgages have a fixed payment. So you could start out today with the interest rates really, really low in a variable rate mortgage, and as the interest rates climb up, you will start to move into what we call negative amortization. You're not paying enough principal to go off to pay down the mortgage, and then all of a sudden you'll get a call and they'll push up your payments. Adjustable rate mortgages, your payments are always changing, so you're always on track. So if you're paying this down over a period of time, you're always on the deadline to get that done within a certain number of years.
So it's a 25-year mortgage. They adjust it every 6 months or whenever the interest rate changes.
Yeah.
So that it's going to be paid off at the day that you contracted for.
And in general, that's usually done in mid-month or at the end of the month with most lenders. So when we get back to a line of credit and comparing that to a mortgage has a principal and interest payment. A line of credit typically has only an interest payment. And therefore, you can take out $200,000, keep paying the interest every month. Okay, interest rates go up, so you pay a little bit larger payment, but you never pay off the principal. So
But you can pay anything off that you want to. If you've got $10,000, you can throw it on it.
Pay the whole thing off,
Yep.
if you want, and then draw it back out. So the bonus with respect to the Smith maneuver, as you were calling it, or tax-deductible mortgages, you originated back in
1976.
76.
November 76, first time I ever published it, North Shore News, and it was in the annual report of the North Shore Credit Union. I wrote it for the North Shore Credit Union to start off with.
In looking at that, the best line of credit is one that you can carve up into a couple of different pieces at least.
Well, Envision Credit Union's got Red Frog.
Yep.
And that's what Manulife is a 5-portion line of credit. You can make this deductible and that not deductible. You can pay off the not deductible, and
yep.
It's all done for you.
Envision requires you to draw out so much in a amortizing mortgage, fixed or variable, and so much in a line of credit. So some lenders will allow you to put $10,000 or $15,000 or $20,000 into a fixed rate mortgage and $500,000 into a line of credit. It won't work with Envision that way, so we'd have to adjust it up. And the line of credit, I'll have to double check in case they've changed it, but it was one chunk. So some of the lines, with some of the credit unions, you can cut that line of credit up into different pieces. Manulife is one. You can have 5 or 6 different pieces. 5 different pieces. National Bank, you can have 99 different pieces.
No, I didn't know that. It's a heck of a day when I don't know that.
It is one. We have an exclusive relationship. Mortgage Architects, the company that I'm a part owner in. There's 64 owners in Mortgage Architects. We're going to 100 owners. We'll never be the biggest super broker in
When
that.
National Bank started back in 1974, 75, 76, I had tax offices in 14 of their branches.
Wow.
Just for the record.
Wow. Yeah, you know what? Well, they're still around. Unfortunately, they're shall we say, managed out of Montreal. Mm-hmm. But we're supposedly getting an underwriting center in Toronto, which may not mean a lot to you, but to us it does because it's a different underwriting style. Yeah. But they've probably got, no offense to anyone else who uses Manulife and everything else, National Bank's probably got the best line of credit product. They are a bit restrictive in terms of qualification criteria, so they're only going to take sort of the A or AA or AAA clients. But that product has probably the best. It's better in cost because we can get right now prime plus 3/4, where most, I've heard someone else mentioning TD and a lot of the other lenders. Van City got in trouble. Well, got some press. The press is good, right? For arbitrarily pushing up the interest rates on all of their lines of credit. So in general, we're seeing prime plus 1 on lines of credit, but either prime plus 3/4 or prime plus 0.85 right now is available through National Bank with our company. So you can do that and mix that with a discount with a prime variable rate mortgage, And you've got the best combination there if you're proceeding, because you're going to be paying off your mortgage, the amortizing one, the one that has principal and interest.
So you, Glenn Kelleway, can write a line of credit now, can you?
Oh yeah, no problem. 3 or 4 different, well, we'll count the credit unions, but 3 or 4 key banks, the big banks, we can do
Now,
that.
can most mortgage brokers write a line of credit?
They can. They can.
But they don't know how to.
They don't. They shy away from it because they don't understand it, and most clients don't know how to use it.
You've the seminar that you were at October 15th.
Yes.
And I think you were at the one we did last week too.
Yes.
And you'll notice one of the questions is how many people here have a deductible mortgage and how many people have been told.
Yeah.
And the one we did on on West Broadway before the September one, September the 3rd, Thursday, September the 3rd. I remember the date because it was my birthday. Anyway, Fred always does these seminars on a date that I have something else to do, because I had to leave the other one for the opening of Paul Swingle's wife, Rosemary Swingle's art gallery. At the one we did on West Broadway at the Holiday Inn, 6 people, 6, not 1, not 2, 6 different people scattered through the audience told us absolutely specifically that their mortgage broker or their bank manager had told them that it was illegal to make mortgage interest deductible in Canada. And I've got a problem with 2 of those right now, because I've told people that they could make their mortgage deductible. Here's how they've done it. They've gone to a bank. The bank said you can't do that, so they haven't done it, because after all, the bank's the guy that's got the money. And they got them locked in mortgages.
Yep.
And I want them to sue the banks, and I want to participate.
Oh, that would be fun.
I got 2 different banks I want to sue. Banks, pay attention, because it's bad advice. And I'm going to say this. You don't have to say this.
Okay.
Okay? You don't have to say this.
But
there is an ad, because I love credit unions.
Yeah.
I've been a sponsor of credit unions for years.
No, me too.
And right now, there's an ad running on television. I mentioned at the seminar, not the one I went to, the White Rock one, that every time I hear it come on, I want to take a gun and shoot the television set. I want to go to, Peter Potter Binikoff used to be an old friend. He was the head of the BC Central Credit Union. There's this frumpy guy with a mustache talking about his wife. He's obviously henpecked because his wife is asking him, did you go to the credit union and so on, and he's saying, yeah, well, I get it, and yes, and then what did she say? And she said, is that ever? And yeah, well, we're going to do this and we're going to do that, and oh yeah, we're going to borrow the money. Did you borrow the money for the RSP? Yes. As if that's good. Not good. And then we're going to take the refund from the RSP and we're going to pay down the mortgage. So you're taking a non-deductible interest loan to buy the RSP. You're going to get at the very most a 40% refund, and you're going to take your refund and pay it back. You've just doubled your non-deductible debt.
Mm-hmm.
And then he goes and shaves off his mustache. Can you imagine? Because the lady at the credit union told him to shave off his mustache. Now that ad, Richard Pitt, now turn your camera towards yourself for a second, Richard. Let me just show. Richard is, Richard was out at your house the day that, there he is. Richard, see, there's a red mustache. I told Richard today, because David Hancock before you had this nice beard, and I told Richard he should grow a beard. And he says his wife won't let him grow a beard, but she won't let him shave his mustache.
Ah.
Now, can you imagine that commercial? Everything is wrong about that commercial.
What?
He's a henpecked, I could use another word, he's a henpecked man. He's got some woman at the credit union pushing him around, telling him to borrow money for an RSP, which 99 times out of 100 somebody shouldn't do.
Yep. And
if paying down the mortgage is a good idea with the refund, that's what he should have done first, instead of buying the RSP. And I can prove it to anybody out there. You want to come and talk to me, I'll tell you, I'll prove it.
Yep.